Hi traders. I want to talk today about the difference between risk management and loss management. We've just had a trade in the trading room where ended up by losing money, but I want to discuss it because it's very, very important to differentiate between the both because a lot of traders mistakenly tend to lump them together and actually they are different. Risk management is not loss management. So let's discuss this trade. In this case, it's CRM. CRM moved down. So we did see CRM gapping down today, moving up, and then continuously moving lower. We did find a very interesting short point over here, right here under $52, where I posted it in the room for a short sale. So I shorted CRM, which initially moved down, but then again it moved up. It moved up all the way up to 52.30, which means that at this point I was down 30 cents. Nothing wrong about it because CRM is trending lower, so I shouldn't be concerned. CRM has done nothing wrong and it did continue moving lower. My target was approximately 30 cents. It did that. It moved 31 cents. But I wasn't quick enough. I was expecting more. I was a little bit greedy. So I missed that very good point. And again, there was nothing wrong about the CRM trade, but I just didn't take my partial at the point where I was supposed to be taking it. And so it started moving higher. I did expect a continuation because I was again, looking at the trend, I was expecting it to move slightly higher and continue lower. However, this didn't really quite happen. What happened is that CRM moved up higher, and again, I should have a stop, and that's risk management. My stop was here, 52.31, right over this topping right over there. Now, there's another rule, and that's again, risk management. You never move out of a trade if it's moving quickly against you. When you see something as quick as that, and believe me, that was very quick, and with a very low volume, if I click on this candle over here, you will see that only 13,000 shares were traded there. So it did move higher and very quick. Now, the thing is, you're not supposed to be moving out of a trade that moves against you very quick because as fast as it moves against you, it should usually continue on keeping the trend and moving lower. That doesn't happen in 100% of the time, and this didn't happen here, but the fact is, it moved really quick against me. So I'm not supposed to be having hard stop in the systems. I don't usually put hard stops. As you can see, it reached the view up. It should have stopped around here and continued moving lower. That didn't happen. So I should have moved out here if it would have moved slowly. It didn't. So I was forced to wait for a pullback, which only happened here. Now, I'm not glad to see that moving 50 cents against me, more than my stop really at that time. And that was a big loss, but I have rules. And that's again risk management. I have to wait for my pullback. I have to wait for a pullback, which sometimes will not come that quick. And these are very rare occasions where it doesn't come. I can remember only 2 times in the last 14 years for me as a trader that it didn't really come and I had to take a few more points of a loss. But in this case, it did come as it should. And now it is not anymore, it is not risk management anymore, it becomes loss management. So I had to work according to my rules, wait for a pullback, and once it started moving lower, and again, I must wait for a pullback, I cannot exit a trade which is moving quick against me, this is one of my rules, then I waited for a pullback, and finally I moved out at 52.25. So I really had 25-cent loss on this trade, which is not a huge loss. That's a loss. I shouldn't have had the loss to begin with. But again, moving out over here, that was a loss management. That has nothing to do with risk management. And these are two different things, and you shouldn't lump them all together. Now, figuratively speaking, risk management is how a pilot should plan it or should avoid an accident. Whereas loss management is how a pilot must execute an emergency landing. What you're seeing here, that was an emergency landing. And again, two different issues. Now, there was one more thing I want to discuss. People are frequently ask me if I only make money in trading. Well, no. I lose money in trading at least, well, on average, I lose 3 out of 10 trading days. Now, this is a day where I lost money. As you can see here, I'm down $200, $210. I'm still holding Apple here. Apple was one of my best trades. I made $982 so far. I'm still holding 100 shares, up $75. But for me today, I'm in a red day, $200. My average red days are anywhere between $700 to $1,000. My average winning day is approximately $1,400 to $1,600. So do the math. I'm losing 3 out of 10 days. So there's really no way that anybody can make money 100% of the time. And I'm not saying I'm doing that. I'm training with hundreds of traders every day in my trading room. And believe me, each and every one of these traders knows exactly when I'm losing money and when I'm making money. So if you want to join my trading room and see how I lose money, well, sometimes you're invited to do so. You can join it for 14 days trial. It will not cost you anything. Just click on the icon that you're seeing right over here and join me and spend some time with me and enjoy my winning days and my losing days. Have fun and learn some more about trading. I hope this lesson was helpful for you, and see you next time.